You know, I do think about it. I think anybody that believes in decentralization has to keep in mind their role. But I think that Satoshi set a really good example, and I think we've seen lots of Bitcoiners during the fork wars. You know, I think there were very strong voices in the Bitcoin community, and clearly, I think that the message here or the idea is everybody has to take their turn and they have to drive the network forward and they have to do what they can to contribute to the asset class. And there'll be a time when they'll step off of stage and someone else is going to have to pick up and carry the torch forward. So you know, I wouldn't be here if it weren't for the early cypherpunks, and I wouldn't be here if it weren't for all the heroic activity that took place during the block size wars. And I don't think I'd be here if it weren't for leadership at places like Fidelity, where, like, let's take Abigail Johnson championed Bitcoin at Fidelity, and my first Bitcoin was purchased from Fidelity. I wouldn't be here if it weren't for people like Eric Weiss, who who orange pilled me. But my view of my role is we needed to integrate Bitcoin into the public markets, into institutional investors. So I couldn't do what they did, but what I could do is I could show that Bitcoin makes a good treasury asset for a public company. I could actually educate public investors and institutional investors. I could work through the legal issues, the accounting issues, the compliance issues that any corporation faces if they want to integrate into the system. And so that needed to be done. There'll come a time, I look forward to the point when I'm irrelevant, when there's 100 other companies that are bigger than me. When Apple Computer buys $25 billion of Bitcoin and Google buys 50 billion of Bitcoin, and then people don't remember MicroStrategy and we can't keep up anymore. And I will, I'll be like that surfer that surfs the wave and then the wave passes you and you just get back on the board and you paddle behind the wave and people don't notice you're there anymore. That'll be okay. I mean, I think, I expect Bitcoin to go on for hundreds, if not thousands of years. Each one of us has 2, 3, 5, 10 years we can contribute to it. And then, you could get out of the way and let someone else carry the torch. Well, first of all, I've been doing business in Germany for nearly 30 years. Germans are great engineers, and I love German minds and I love German engineering. And I think that Bitcoin, of course, is the first example of monetary engineering. So it wouldn't surprise me that Germans that study so much in the world of engineering, they're so fastidious in the way that they engineer their structures, their cars, their engines, their machines. They'll look at Bitcoin and they'll realize there's engineering beauty there. And so I think that's one of the reasons why there's a lot of passion for Bitcoin in Germany. With regard to companies, I think the key to keep in mind here is that at every single stage, Bitcoin needs something different. And starting in the second quarter of 2020 was the era of institutional adoption. And for an institution to adopt Bitcoin, they have to solve the issue of custody because they have all of these legal restrictions about how they can custody the assets. And they have to solve the corporate governance issues. Like for us to buy it, we have to figure out how to disclose it and then how to manage our shareholder relations. It's a very intricate thing. And then there's an accounting issue. The accounting for Bitcoin was set by FASB when the largest holding of a publicly traded company was maybe $1 million. When we started looking to buy Bitcoin, we did a search and we found that maybe one company had owned a couple of $1 million of Bitcoin once a few years ago, over stock or something. It was a trivial thing. So FASB set the accounting treatment to be the most conservative you could imagine, which is you can never write it up, you can only write it down, and you have to write it down to the lowest bid you can find from anybody, anywhere in the world in the history of the ownership of the asset. So That's the same as if you bought something and you went to a party on Saturday night and you asked everybody in the party whether they would buy it from you, and someone told you they'd give you $1 for it. So you wrote it down to $1 and then you held it at $1 for the next 100 years. Okay, that is prejudicial, kind of hostile accounting. It's toxic for a public company with a gap statement. And so there's no reason for the accountants to take any other treatment because they were just being extremely conservative. Now we're in a situation where there are billions and billions of dollars of Bitcoin on publicly traded balance sheets. And FASB has taken up the project, and there's massive interest in reforming that accounting. So I think that if you're a publicly traded company or a conservatively run company, and the majority of your enterprise value comes from selling cars or selling software or selling anything else, you can't reasonably hold a large amount of Bitcoin on your balance sheet because the volatility of the accounting, it impairs the transparency of your P&L and your balance sheet, and therefore it's toxic to you as a public company. So a conservative CFO or CEO is not going to do it until you get to the point where you could adopt fair value accounting, where you could actually show the true value of the asset. So you might think that if you're a consumer, you might think, oh, the regulators don't matter. But there's a small number of people on a committee that set accounting standards for all these publicly traded companies, and they do matter. And to the extent that it is impossible to figure out how much the Bitcoin is worth, then that means that 10,000 entities with trillions and trillions of dollars will say, we're just going to wait. We're going to wait. And so I think that the reason, if you look at European companies, they're more conservative than American companies. The most aggressive entrepreneurs are like American private companies, like the Ubers or the Airbnbs or fairly aggressive. And then sometimes publicly traded companies in America, if they're run by founders, they can take risks. But traditionally in Europe, it's businesses are more conservative. They go a bit they wait for the American companies to take the risk in some cases, and they focus upon engineering. So I think that what will happen is the accounting will matter, and the accounting will be one element, and the other elements will be regulatory clarity from the SEC and the CFTC and Treasury. Though that will allow banks and publicly traded companies to start to handle the asset, then public investors will handle the asset. And then I think you'll see European companies look at that and they will be emboldened by that and they'll follow. But this entire process will probably unfold over a decade from 2020 to 2030.